Hey traders, welcome to the monthly equity watch list. I remain bullish the S&P, I remain bullish the Dow. I'm not so sure on the Nasdaq. I think the Nasdaq is going to be moving sideways for quite some time. I think the tech move has been overdone, which means we're going to be cycling into other stocks. I'm quite bullish healthcare. I think healthcare has a long way to go. I think utilities still have some room to go. I think real estate has some room to go. But generally speaking, I think tech is overdone and will be, at the very least, moving sideways in this range for the next few months. So getting started on the S&P, as you can see on the daily chart, we have a really nice corrective structure that's just completed. Did everything we were looking for. We got the alternation, we got some really clean price action, and we broke down into this 3200 region, 3240, and turned around and started to trend to the upside. So pretty much a textbook ABC correction, a little bit of a skewed running flat, but kind of matches exactly what we were looking to get, and we're starting to trend to the upside now. Taking a look at the lower time frames, what we've seen is potentially a fairly decent corrective structure here, and looks like we're off to the races once again. So we had a nice little impulse up, small little ABC, and a nice push higher. So we can expect further upside to come, expect further bullishness in equities, and it's kind of mirrored by things like the Dow Jones, showing exactly the same kind of structure, very clean ABC correction, nice little takeoff to the upside, and looks to push higher from here. So very clean corrective structure, a very bullish price pattern. Expect to go and test the 32 to 34,000 region on the Dow. Same with the Russell. The Russell has just taken off like a bomb. Very clean corrective structure. Again, pretty much everything we look for in a correction. And we're off to the races. So can expect further bullishness for US equities. In general, not quite the same thing for tech. Tech feels like it's been overdone, and we may be looking at a deeper pullback, or we're just looking for a chop higher. I kind of lean towards a slow chop higher. I don't see how the rest of the markets can rally so strongly if the Nasdaq is going to be heading lower. So what I expect from this region is just a slow grind up back towards the highs at around about 305. So tech really not the place you want to be. Generally speaking, there's not too much in it. There's a couple of tech stocks I would look at buying, but generally speaking, the FANGs are a no-go for me, and it's all about just being patient in that region. We want to go more into healthcare. Healthcare is looking really strong. We want to go into things like, I think, utilities, real estate. Those are the stocks that really want to start to outperform tech stocks. So expect tech to kind of fade away, and the more consumer staples, things along those lines, to start to rally stronger. Getting into Facebook, you see that exact same picture. Strong pullback and kind of sitting in nowhere land at the moment, no man's land. The assumption that I'm making, very speculative assumption, is that we're just going to chop higher from here all the way up to the top. There may be some shorter term trades in it, but nothing you really want to hold longer term as we speak. It's very early days. Obviously still potential for push lower. That is a possibility. But right now, as it speaks, we are aiming for a chop back up to the highs from this region. Apple, very similar situation. Amazon's the only one that's slightly different, and I suspect it has to do with the rise of Amazon, not the rise, but how Amazon will be very widely utilized in this environment as a company. So Amazon looking very much like it wants to head higher from here, at the very least to test the highs in a more impulsive nature than the rest. If we go into the lower time frames, you can see very clean expanding flat, and we just completed a nice little running flat for more upside. So expect a push up towards the highs from this region in Amazon. Very nice looking trade, but I wouldn't be too confident in holding it in too much of the longer term scenario, just because of the basic tech negativity that's around at the moment. So just be cautious in holding this one. Move your stops pretty close moving forward. Microsoft, still looking for more downside, potentially quite a clean short now at the moment. If we zoom out to the 8 hour, you can see we have a fairly clean ABC corrective structure, but I don't see this one as being complete. I still see more downside in Microsoft. I don't know what it is about Microsoft that's looking so bearish, but it just feels very bearish to me as we speak. It has done enough to be called a contracting flat, as you can see, and we just need to be cautious of further downside if you are looking to get long. If you go into the lower time frames, it actually kind of leans towards more downside. As you can see, impulse down, ABC corrective structure, and it looks like the start of an ABC corrective structure on the even lower time frames for continuation to the downside. So if you start to see further downside in this region, potentially entry order below these lows could really trigger a nice short down towards this 175, 180 region. So just keep an eye on Microsoft as a short. Netflix, kind of also nowhere land, no man's land. Definitely in a corrective structure, but not much clarity within that structure. I don't like this as a B wave, so you'll need to see a little bit more in terms of correction. So I expect to be in this region for a little bit longer, maybe develop into a bit of a triangle pattern. And keep an eye on that as a trend line for potential turnaround. And later on, this may play out as a little bit of a triangle. But very early days, very speculative, and nothing really tradable in it for me. Google, pretty much the same scenario. Big drop off the highs, 1744, all the way down to kind of 1407. It's a big drop and very early days, but again, I think is one of those ones that's just going to chop back up to the highs from here. Very choppy move, not really worth trading as we speak, given the current price structure. That's all very speculative and just need to be patient with it. Alexion Pharmaceuticals taking off really nicely, kind of matching exactly what we were looking for in a trade. What I would look for now is just one more leg lower. So we got that move. Now we're waiting for this move down. Little push down towards this kind of 115 region, and that will be a nice completion to a corrective structure and a continuation to the upside. Is there a short trade in there? There is potentially, but it's just too early in my view. You need to wait for momentum to die off and wait for a turn in price. As you can see, pre-market slightly down, good sign of a turn. And you can see it's quite a nice little structure in here. Nice impulse down, push up, choppy corrective price action, push up. Now you're looking for a push down towards 112. So potentially quite a nice little short trade, which you can then swap around into a long trade to follow that. So keep an eye on pharmaceuticals. AMD, Advanced Micro Devices, just zooming out to see how far we've come in terms of a move from the lows without much of a correction, very much a parabolic move. So keep that in mind when looking at this on the lower time frames. Lower time frames look good for more upside. We spoke about this trade breaking out of this little wedge and a push higher, and that's played out very nicely for us. But we're approaching a section where we need to start to be very conservative as to where to from here, given how far we've come on those lower time frames. So we just need to be very cautious about the next move higher and actually start to trail your stops fairly tight when it comes to trading this further down the line. If you are long, stop loss down to here or moving a stop loss up to this probably $80 region is probably where you want to be, and just be cautious of a little bit of a rising wedge, which we're starting to see at the moment. A little bit of MACD divergence coming as well, so just be very cautious of a pullback and just keeping your stop nice and close in this area. ARC ETF, higher time frames, we've come a long way, and we really need to look for a little bit of a corrective structure if we are going to see any more significant upsides, which means we'll be in this range for a while. What I do like about this trade is that there's a potential short-term short here. Classical chartists would call this a double top. As you can see, it will push up into the top. There's not much in terms of MACD divergence. You might see a little bit more upside, but as you can see, very clean price structure. Push higher, nice little kind of zigzag, flat, regular flat, down to the lows, and then another push higher. That's your B wave, and you would expect, sadly, a little bit of a choppy move down, but should be quite a nice move down from $100 all the way down towards it, kind of at least 90, potentially touching on 84, maybe even going all the way down to 81, given how far we've come on the higher time frame. So look out for ARC ETF as a short trade down towards 84. Airlines being bolstered by some airline talks, some stimulus talks. So we spoke about our last analysis being kind of a mixed bag. Where we're looking at right now, I'm kind of leaning towards bullish Boeing at this scenario. As you can see, nice little push higher. If we go to a retracement of this move, you see we touched on the 0.618. You know, we don't often use 0.618, but we can start to look at this as a zigzag correction now. And if we are looking at a zigzag correction, we can start to look for evidence of some upside. And if we go into the lower time frames, you can start to see a little bit of that evidence where you see a strong push off these lows from an area where we would be looking to, because we did break an important low here at 152, which means we could potentially have seen a turn, and we went into quite a clean ABCDE expanding triangle and saw quite a strong turn off the lows of that triangle. So definitely one to look for a trade higher. If you start to see more upside momentum, if you want to be more risky and get into the trade as it speaks, I will wait for an entry order above the highs if you want to be conservative. But getting in now and looking for a move up towards kind of 290, 275 to 290 could be a really nice trade being long these airlines. So it's not the cleanest picture ever. I'm not a huge fan of it, but the kind of macro picture and the talk around it matches what the chart is saying and leaning towards a push higher. That's why we struggled to get that downside momentum on this, because it wasn't turning out into your standard ABC flat pattern. It's more of a zigzag B wave and a push higher. It's more of a complex zigzag. If we go into, say, the weekly, it makes more sense. As you can see, zigzag, impulse up, little chop down, impulse up. And you can start to see why we're looking at it as a zigzag. And if it does complete as a zigzag, we can see another test of the lows to come, which kind of matches the picture where once stimulus runs out and the economy starts to really hurt, you might start to see the actual reality. This will be the kind of reality impulse down that comes once stimulus starts to lose its effect. So yeah, for now, long airlines, but cautiously long at the same time. Alibaba, higher time frames, as you can see, very clean corrective structure for more downside. That's what I'm seeing here. And quite a strong move as well. You'd like to see a move down towards the 200 buck region once we start to see a turn. Going into the lower time frames, you'll see we thought we might have seen a turn already. We touched on the highs, saw a strong push down, went into a little bit of a corrective structure, and my assumption was we were going to see continuation out of this triangle. However, we broke higher, 2 gaps up, and went to go test the highs once again. So it kind of leaves me wondering where we're at, but at the same time, it's also quite fertile ground for a short trade if we start to see a downside in momentum, because as you can see, very clean MACD divergence on the 4 hour. We now have a double top formation at the highs. We have a couple of gaps that need closing. So even if it is a short-term trade back down to the lows, that could work really well. But given where we're at on the higher time frame, you might see this just continue down from those highs and trade as a double top. So I like to, I'm quite a big fan of looking for the short trade in Alibaba from this region. I'd like to see a kick down in momentum. As you can see, MACD divergence on this double top. But I would like to see a little bit of downside momentum first before looking for the entry. But definitely a time to start looking for those short entries on Alibaba. I suspect this might have some kind of anti-Chinese rhetoric in it. That's what's going to be the catalyst to push this down towards that 200 buck region. And it's all got to do with the elections. Elections speak about anti-China, negative China, trade balance, things along those lines could have a negative effect on Alibaba. And that would be a catalyst to push lower. So keep an eye on this one. Really nice short trade. Beyond Meat continues to rally higher. Very frustrating because the structure leans towards some more downside momentum. As you can see, nice little push higher. This is the daily chart. We have a nice little push down towards this 120 region and then a push up where we're at. Seems like we're in a B wave. We're just struggling to see a dying off of momentum. That being said, if you go to the hourly, you'll see we've come a long way without much of a corrective structure. So big, strong push higher, and we're in need of a correction at the very least. Doesn't look very B-wavy, but it does have this little bit of a corrective wave within it, whether you look at that as a flat pattern or an expanding triangle, or even as a triangle itself in this region, where that would be your A, B, C, D, E, A, B, C, D, E, impulse up, A, B, C, D, E, impulse up. That's kind of what I'm leaning towards, looking at as the structure. And if that is the case, we're very much at the full target of that structure. So you'd want to see a pullback, and if we zoom out to the higher time frames, you will see that a pullback should match that structure, or that velocity, at least down towards this 140 region. So kind of short beyond meat at this point, looking for those short entries. Very hard to be long beyond at this point. CRM, biased towards the short side. It's not the cleanest structure ever, but it does have a little bit of confluence in it. We have this huge gap that needs to be closed, or should be closed. I won't say needs to be closed because it's not really a rule. You have a little bit of corrective structure that looks like an ABC correction, or even an ABCDE. And if we start to see some downside momentum, it could be a nice trade, because the downside potential target would be this 218 to kind of 210 region. So a nice short trade in it. A couple of nice short trades on the cards if they do play out, but it does require a shift in momentum, and you want to see a turn to the downside and a short entry presented to you before getting into this. Delta, also a mixed bag, very, very confusing picture. Impulse up, impulse down. Is this an ABC running flat for more upside? It seems like the case as we speak. Push higher, A, B, C, D, E, and then it looks like another push higher, very similar to Boeing. So this would be your first impulse of the lower degree structure, and you would expect the second one to push a little bit further than that, given the higher degree structure. So you want to go test these highs at kind of 38 to 40, and then another pullback from there. It's kind of what I'm leaning at, where this is your first impulse, ABC, and then another impulse to follow that. So airline's very mixed bag, but in the short term, I like the longs. We're looking for long entries. DuPont, nice little push down towards the minimum target. We've definitely touched on our minimum targets, and looks like it wants to turn here. Lower time frame, still a potential for a little bit more. As you can see, this is a push higher, ABC down, potentially a bit of an expanding flat here. And this little red candle to end the day yesterday is a potential warning sign that we could see some more downside to come. And then that would play out as impulse down, ABC, impulse down, and DuPont then completes quite a clean ABC correction. I expect more downside because we haven't seen the alternation we would look for in this wave. So we need to see, in my view, one more test of these lows, go break these lows at 53, maybe push down towards 52. And that's when you'd want to get long to the upside, because it's a very clean corrective structure after a nice impulse for more upside. Also, higher time frame, just a reminder, definitely looking very bullish for a test of the highs at 110. So this is one of those shares you actually want to buy the share rather than a trade. You want to really invest in what you have, invest in the company itself, given the structure and the kind of backdrop that DuPont has. It's kind of a rotation out of tech into your more stable equities like DuPont. Disney, very clean corrective structure that we just completed. We didn't close the gap, so potentially a little bit more downside to come to close this gap at 118, but we've definitely done enough to push higher from here. Definitely want to start looking for your longs in Disney with upside targets of breaking the highs at 153. Very nice trade, very high on my watch list to get long Disney. EA playing out exactly as we said it would. Nice little push lower, went into very complex ABCDE correction. Need to move the E wave a little bit higher, but as you can see, very clean head and shoulders pattern from a classical trading point of view. And what you can expect is continuation to the downside from there, especially given the higher time frames is pointing towards a move down to at least this $100 region with potential to go break the lows at 75. I don't know why the chart is so bearish, EA, fundamentally speaking, but technically speaking, it is a very bearish chart and it's kind of playing out to the downside quite clearly. So keep an eye on this. Look for your short entries. It was a really good clean break and retest, and you should already be short from this 130 region, and something you want to hold on to for a little while to come. Expedia, we've added Expedia to the watch list. Higher time frames, not great, but it does have potential for some short-term trades within it. If you go down to the hourlies, some really clean short-term trading to come. As you can see, impulse down, impulse up, impulse down, A, B, C, D, E. So what you can expect now is this impulse down, and then this impulse up, and then another impulse down. So some really clean short-term trades to come in terms of the price action we've gotten before this. So expect a move down towards 85, at the very least break the lows of this 88.61, and then another push higher towards 95, and then another short trade from there. So if you're looking to day trade something, keep a close eye on Expedia because it's giving you some really clean price action. Ford added to the watch list this month. As you can see, zooming out, higher time frames tend to look at Ford as a corrective structure where we have a nice little ABC correction in play. So this would be your A wave. We are currently in process of trading the B wave to the downside, and then will be a C wave to come down the line. That being said, zooming in, as you can see, what we're looking for now is a C wave within the B wave. So there's a little bit of an ABC within the B wave. If you go into lower time frames, as you said, you're looking for this push up towards 12 to 14. Plus, we've just been given a really clean corrective price action on the very low time frames. So lots of cohesion within the time frames and very clean corrective structures on the lower time frame, which makes this a very clean, potentially very clean trade. So you have a push higher, a very clean B wave, expect a push up towards 8, that real region, potentially breaking the 776 highs, which would be ideal. Then you would look for a short trade down to 5, 550, maybe 6, that region, and then a very nice long trade from there. So again, one of those pairs where you can trade up and down and get some really nice returns out of them if you are day trading these things. So keep an eye on Ford. There's some really clean price action that's going on at the moment. GDX, bias for the upside. As you can see, zooming out, you'll see a nice kind of running flat, a little bit of an expanding, but running at the same time, little ABC. Potential that we'd have to relook at this, but for now, actually, you know what? I am going to relook at this picture. I'm going to start to look at it as this as its own corrective structure. Get rid of this. And I'm looking at this as your first impulse. That being said, it doesn't really fundamentally change your trade if you're in this already, because it does look like it wants to chop higher from here. So I would expect something along these lines up to the top. And obviously potential for this to become a little bit more running, a bit more of a running correction for continuation upside if you are very bullish gold. Lower time frames also kind of suggest a potential entry to the long side because we have this little push off the lows, confusing ABC, potential to chop or to push higher from here. So that's what I'm looking at for now. I don't like this as a C wave. It's too corrective, which makes me think, okay, then this must be an A wave. We have a segmented A wave, expect a choppy move up as a B wave, and later on in the picture, you'll see a little bit of a C wave to the downside. So either way, we do expect upside, just very choppy upside, up to potentially or hopefully break the highs at 46 to give us more clarity. So keep an eye on GDX. GDXJ is a bit more cleaner, of a cleaner picture. impulse down, very choppy corrective price action, impulse down. But at the same time, it could be the same scenario where all of that was just your A wave, very complex A wave. Either way, from here, it's either a choppy move up, which matches GDX, or it's an impulsive move up, because that is enough of a correction to say we can see some impulsive price action. If you look at the higher time frame correction, it makes more sense that we're here for a little while, because that's your impulse, which means your correction needs to last a nice long time and needs to kind of play out. It makes more sense that it's going to play out as that. So yes, bullish, but choppy bullish. And that's kind of what my picture in gold is. Gold's come a very long way without a decent correction. And you expect a little bit of a decent correction in gold to kind of relate to this price action in GDX and GDXJ. Goldman Sachs remain bullish. We're looking at this as a really clean trade, kind of turned into something more complex, but is starting to play ball with a nice push up towards the highs at 224. So we suggested buying anything below these lows, which we did get, and we're starting to push higher from there. One small concern that this turns into its own little running flat for one more downside. But for now, I'm looking at it. That becomes a little bit too complex given the length of the impulse preceding it. So I like this as a corrective structure now to push back the highs, one more pullback to complete the structure, and then it's a nice ABC running flat, complex running flat for continuation to the upside. So the picture remains bullish in Goldman Sachs, just a bit more choppy than we wanted it to be. Halliburton, as clean as it gets, very clean corrective structure. You really want to start to look for long trades in this up towards 20 to 24 region. That's what the structure suggests. And oil is kind of matching that. Oil's a little bit of a mixed bag, actually, but Halliburton kind of confirms to me that oil wants to head higher from here, and we want to see some dollar weakness translate into resource strength. And that's what we're seeing in Halliburton as we speak. So I like Halliburton, accumulate Halliburton for the long haul, because we could see a nice surge in oil from here. IBM, as I said, there's a few tech stocks that I would be bullish, and IBM is one of them, although it is going to be a bit of a choppy move. So expect a nice little push higher. We've talked about this in previous webinars, where we want to see a push from 116 up towards the highs at 135, and then another push lower to complete the corrective structure, and then a push up towards 160. So expect a bit of a choppy corrective structure, but at the end of the day, it is quite a bullish looking corrective structure in the long run. Pre-market, wow, as you can see, pre-market 139 definitely matches the structure and wants to be very bullish. So quite an interesting to see that. That never got my attention until now. So pre-market, definitely something's happened in IBM. We want it to be bullish, and we're getting that bullish price action. And that kind of matches now, because now you have a massive gap in the market. You want to see that gap close. Probably won't get all the way down, go back down towards a gap close, maybe even a little bit more upside. All of that's going to develop into a nice running flat, and then another push higher. So once again, price structure reigns supreme. Lockheed Martin, really messing around in this region. Made me believe that actually what we're looking at is the center of a B wave. So what we're seeing is an A wave down, choppy corrective price action. You'll see a little push higher, and then a pullback, and then a strong push higher from there. And all of that will give you a nice big running flat correction. So although the picture has changed a little bit, we were expecting an impulse up. It's now becoming a C wave up with a little bit of a pullback, and then your impulse up. Either way, the structure is pointing towards more upside to come down the line. So keep an eye on that, and probably worth accumulating some stock in this region, or looking for a nice long entry, because we are completing a very long drawn out central B wave. And eventually this is going to take off to the upside in my view. So I really like this still as a long trade. Classic chartists are going to want to tell you this is a little head and shoulders. but in this case, I will disagree with them. If anything, they're going to start to label it a continuation head and shoulders once it takes off. So keep an eye on that. I remain bullish. Lockheed Martin. Live Nation, something we added to the watch list. Just looking at this as an impulse up, we're starting to see a little bit of a corrective structure here. So no trade in it really. If you want to get risky, you can trade this as a short flag trade down to the lows, down towards 45. But really what I'm looking for this is a little bit of a completion of the structure and another push higher up to the highs at kind of 76 in that region. So look for that to play out as a nice structure. Nice little ABC correction within a higher degree ABC. So could get a nice long trade from the 45 up towards 76. Mastercard, who remain bearish. Look for your short entries down towards kind of 280, potentially as low as 220. As you can see, very clean corrective structure. Lower time frames, kind of messy and kind of pointing towards a little bit of an expanding triangle. If you look at it, something along those lines. A little bit of a double top here, very interesting. MACD divergence and quite a strong pull down from there, but followed by another push higher. So we might expect a triple top to complete itself here, because all of this would play out as a little bit of a corrective structure for one more push higher. Either way, I still look at this as a corrective structure for more downside, given what we're looking at. The only danger is what this turns out to be is a B wave. And what you look at is this was your A wave. This choppiness continues all the way up to the highs, becomes a B wave, and then you get a C wave down to the lows. So that's kind of the only bullish picture I would have. But generally speaking, the higher time frames are saying, listen, we need to see one big pullback to come. The only worry is that we form a little bit of a corrective structure, it becomes a bit more drawn out, and the high, we haven't seen the highs yet. We still need to see the highs. So you want to look for those short entries, but just be cautious of that picture that we might still see a little bit more upside. Mattel Inc. played out exactly as we said. Nice little chop down towards this 1050 region. We're looking for buys in that region, and we saw a nice strong surge from there. Higher time frames remain very bullish for potentially test of those highs at 48. So keep an eye on that. We may be seeing what's called an ending diagonal, an ending expanding triangle that would have ended there, and then a push higher from here, which could get very bullish. So just keep an eye on the Mattel to really start to get some legs to the upside. But either way, something I really want to own in the long term. 3M, hard to say if we've done enough here and what this is. If this is an impulse down and we're looking at this move lower, it hasn't done enough in my book to say we're starting to hit higher from here. Ideally, I want to see a break of these 48 region. Go down, break those lows at 148, and then push higher from there. Obviously, we could still be in this wave. We could still see a little bit more upside first, and then get this push down, and then push higher. So keep that in mind. That could still be a potential as well. I'm kind of leaning towards that as a picture. But right now, kind of in no man's land. If you are short, you have to be cautious that we're going to turn higher from here. If you are long, you want to be very cautious of a long trade here. This could potentially be an expanding triangle, and your lower time frames would suggest impulse up, expanding triangle, impulse up to match this move, and then get your push lower. So I like the structure. We're just in a very complex area right now, and we need to be patient with it if you are going to trade it. So just be cautious. Moderna looks to me like we've had a running flat. We had an impulse up, And we just completed a lower degree corrective structure for more upside. This might start to develop into a bit of a running triangle if you look at it that way. But either way, the picture remains fairly bullish in my view. Impulse up, corrective structure. You want to see another impulse up to go break the highs at 94.90 because of this running flat structure on the higher time frames. You're just looking for entry where you can find it. As you can see, it's been a bit choppy, hard to find an entry. Is this going to play out as a bit of a running triangle? It's potentially the scenario as it speaks, as we speak. So you have to be quite patient with your entry order and your stop loss. You have to be quite safe with your stop loss because this could easily pull back a little bit more, turn into a bit of more of a complex structure. So just be patient with it and just be very cautious of where you place your stop loss on that one. Morgan Stanley, I remain bullish. Morgan Stanley, zooming out, you'll see very clean impulse up, ABC, very clean structure and looking for more upside. Pre-market, we're a little bit down, so potentially going to test the lows once more before we take off. It looks like it wants to do that before we take off to the upside. Higher time frames, definitely bullish though, so we're looking for those long entries where we can find them. Just as you can see, this pre-market is signaling more downside to come and a break of these lows before we take off to the upside. Structure in here is very messy. Potentially, this pullback is actually just part of a running flat, which means we don't need to see the lows broken. This could just be an impulse up, ABC, and then from here, an impulse higher. So you're looking for long entries. A long entry above these highs that you can forget about with a stop loss below these lows is definitely available to you. You just put it in and let it run. Your upside targets are going to be around about 68 to 72. So that's a very clean long-term trade with an entry that you can just forget about. The structure says you can do that and it looks good to me. Starbucks, couple of scenarios. I like this as a long trade. It's done enough as a contracting flat. It's just a really ugly contracting flat. As you can see, if we measure the A wave and we measure the C wave, as you can see, touching on the 0.618 and taking off. The only problem is because it's a 0.618 and because there's no crossovers, there's no clean structure to it, we could potentially be going to test the highs as a double top and only then pulling back towards the 79.14 region that we were looking for initially. So you have to just be cautious of that. I'm kind of leaning towards that as the scenario, a little bit of a double top and then a big pullback to come before taking off. So let's see how it plays out. So I have to be cautious with this one. And I'd have to wait for a bit of a clean, lower degree corrective structure to trade to the upside if I was looking to get long this. If we go to the hourlies, wasn't much in it. Be hard pressed to look at that as a bit of a running flat for more upside. So I remain cautious in getting long Starbucks. I like the long-term structure long, but I still think we might see one big dip before we take off from there. Twitter, kind of the same scenario. I'm leaning towards one big pullback first before we take off. As you look at the structure, impulse up, ABC, impulse up, that's a nice B wave in my view. And I want to see a pullback from there. Going to the hourlies, as you can see, quite clean MACD divergence. Problem is on the hourlies, this might turn into its own little running flat structure, which is bullish, which means you'd have to look at this as a contracting flat. And this is your first running flat for more upside. So the only way I could really trade that with any confidence is an entry order above the highs from here. So a bit of a mixed bag on a couple of these stocks. But if you do see it pull back towards 37.50, that's a great buying opportunity. If you have an entry order above the highs, it's an okay buying opportunity, but it's still a good buying opportunity for continuation to the upside. So just have to be patient with your entry orders and quite cautious with your stop losses. Visa, added Visa to the list, kind of matches the Mastercard situation, where we have a nice strong impulse down, impulse correction, impulse up, and we're starting to see some downside momentum, which could play out quite nicely as a short trade. Lower time frames, a little bit early, but potentially looking at a bit of a running flat here. So if you start to see some impulsive moves to the downside, if this starts to look like it wants to continue lower, and as you can see, there's a little bit of a gap here and potentially starting to form a little bit of a head and shoulders on these lower time frames, it means that you can start to look for a short entry. So if you go down to the 15 minutes, it's a very convoluted, but you could potentially start to see a little bit of a head and shoulders slash topping pattern forming there. That's why we don't do classic charting, but the structure is saying there's some more downside to come, and it kind of matches Mastercard. So keep an eye on that. Keep an eye on retail figures. If retail figures start to drop, you'll start to see these numbers drop. Verizon, still looking for this one last push down to 56 before we take off to the upside. So zooming in, this is quite a corrective looking move for another push lower. Lots of drying off in momentum, which means you could see this push down quite strongly and then turn to the upside. So potentially a quick short trade on the break of this trend line, but then you definitely want to switch that around once we get into that region and turn to the upside. The problem with this short trade is there's no guarantee we're getting this low. This is a very speculative low. Because it's an E wave, it doesn't have to get this low. We've done enough. Once this line breaks, and probably once this 58.60 breaks, it's going to have to say we've done enough to turn to the upside. So you have to be very cautious with your stop loss. And I would say you're going to need to make your stop loss a long entry as well, to flip it around to trade back up to the 64 high region. So I remain bullish Verizon in the long run, just waiting for this one last move down. I'm not so keen on the short, but I'll definitely want to look for that long trade once it gets there. So cool, guys, that's it. That's the monthly update. Some fairly interesting looking charts. A lot of them are saying a little bit more downside before the upside starts. But at the same time, the indexes are not showing that. Maybe we are going to see a little bit more upside, a bit more downside on the indexes before we really get going to the upside. But that being said, the indexes look really clean and ready to go. So just choose your trades wisely and look for very clean longs. If I was to have a little bit of a top 5 list, I will actually have a top 5 list, and I'm going to put that out either tomorrow or over the weekend of my top 5 trades in US equity. So keep a lookout for that video, and I'll leave you there. It's cool, guys. Members, we'll see you in the academy on Monday. The rest of you, the next video would be out of the weekend for top 5 trades. Otherwise, start to look at joining the academy. We have these videos twice weekly, and our members are doing really well with their trading from those videos. So definitely worth looking at a membership. We are currently running a special, and we have I think 4 or 5 slots left in the 50% off special, and prices are never going to be that low again. So definitely something you want to jump on ASAP. It's cool, guys. Have a great week, and we'll chat again soon.